Hello, everyone. It's Pablo.zuanic here, Spaces. We are hosting Irwin Simon, CEO of Tilray Brands. Tilray, Irwin, I think you're on mute. There we go. Welcome, Irwin.
Welcome, Pablo. How are you?
Doing great. Thank you. Look, we have a good number of people listening to us. Just for the participants that joined, thank you for joining. This is going to be a conversation, straight talk between me and Irwin. People can listen in. I will not be taking questions or comments from the participants. Irwin, let's start with an introduction, a brief overview of the company, and remind investors why they should buy your stock.
Well, I think number one, let me come back and give a brief overview of Tilray. In 2019, when I became our chairman and CEO, I became our chairman in late 2018, and that was late. Tilray at that time was a FRIA. We went through a transition in senior management, ownership, and dealing with who we were. Tilray, or the FRIA at that time, was about a $50 million company, losing about $20 million a month. And over the years, my intention was to divest, to actually come back and not divest. It was divest assets, number one, that didn't make sense. And from a standpoint of come back and trying to ensure that Tilray was differentiating from all other cannabis companies. I wanted very much for us to be a diversified company. I wanted to have adjacencies out there. I wanted us to be not just dependent upon legalization in the US. And I wanted to make sure that we could be cash flow positive. We had a good balance sheet out there. We had growth, and we were built around brands. And with that today, as you look at our business, in our Canadian business, we have the number one market share in Canada, with about a $300 million cannabis company that's in flower, that's in pre-rolls, that's in edibles, that's in drinks. And listen, the Canadian market has definitely been a difficult market in regards to price compression, higher taxes, still having, an illicit market out there, and going through the education to, consumers, why they should buy from a legal market, educating consumers about all the benefits of cannabis, and at the same time, living through the expenses that we have spent or I inherited in regards to row houses where we spent over billions of dollars, inherited all the other expenses that were spent out there, whether it was a FRIA, whether it was Tilray, whether it was Hexo, but turning Tilray into ultimately a profitable cash-free company in Canada. Canada is the only country in the world where cannabis is legal from a recreational standpoint, a medical standpoint, where you can sell drinks, edibles, vapes, etc. So, with that, yes, my expectations were to have higher, share in the marketplace. I still expect that. There's probably today around 1,500 LPs in Canada. And I ultimately think, the Canadian market will sort itself out. I like what the Canadian government's trying to do in regards to collect past due excise tax. I hope when the Canadian government comes out with its new budget in April 26th, I think the date is, that they go to a flat excise tax, which would be about worth $80 million to Tilray. And ultimately, with changing the way you can market product, educate consumers in regards to the benefits of cannabis, educate the consumers about brands, that this helps the cannabis industry tremendously. And I hope that's the same for every other LP out there that's able to survive, because I think a very competitive industry is something that's very important within this industry. So that's where we are in Canada today. And, we're making lots of headway. Nobody else has ever grown cannabis in 1.5 million square feet, of grow facilities. So yes, there's sometimes challenges with potency and quality and stuff like that. Yes, there's certain challenges out there, but I have to tell you, with that, we're making tremendous headway on our grow facilities, with our lighting, with our irrigation systems, in regards to the market when it changes on potency. So I see and I feel good about what we're doing in Canada. On the other hand, yes, we've run into, issues in regards to price compression. If you look at the Canadian market today, it's probably cost us a couple of $100 million on price compression, which comes right off the bottom line here, that ultimately affects our sales number, and it comes off the bottom line because we still have all those costs, incurred. So hopefully what we're seeing is price compression, subsiding. Hopefully we see some tax dollars coming back into the business. Hopefully we can advertise and educate the consumers on brands out there. And hopefully we see either some consolidation going on out there, or the government enforcing collection of excise tax, just like Tilray pays today, and it's $150 million. So that's the Canadian market. In regards to the US, when I first got here, everybody told me, I got to go into the US, I got to buy options, I got to do this like a Canopy has done, like others have done. And I'm someone who does not like to depend upon the government and bet on the government, because you just never know. And thank God I didn't, because 4 years ago when the Biden administration was coming into play, everybody said, you know what, legalization has come around the corner, and it's almost 4 years and we see where we are today. So my plan was to diversify in the US and being a Nasdaq listed company, we could not touch flower. So the couple things that, we tried to do: number one, diversify into adjacencies that ultimately could combine into cannabis or cannabis drinks or cannabis products one day. And that was to go into the alcohol spirits business. In 2020, we acquired Sweetwater 420, which 420 everybody knows. It was a very successful and profitable beer business. Like everything else, unfortunately, COVID came along and on-premise shut down. So with that, we acquired Sweetwater, and it got us into the beer business. And since then, we went on to acquire, on the West Coast, Green Flash, Alpine, Nelson. We went on to acquire Montauk Brewery, which is the #1 selling beer in New York. And this past September, we acquired 8 brands from Anheuser-Busch that ultimately, on a run rate and growth and innovation, my expectation is to get us to about a $300 million beer business, the 5th largest craft brewer in the US. And I think there's tremendous opportunity within the beer, the energy drink, the water business. And my whole thing is how we diversify and be a beverage business. If one day I could sell, cannabis infused drinks in the US, it's, I think, $1 billion opportunity. Our second business is our spirits business, which is Breckenridge Distillery, which is bourbon, vodka, and gin. We acquired that in 2022, and it's got world renowned, winning bourbons, great brand out there. We have a national distribution business, a national distribution deal with RNDC that distribute us in all 50 states. And just let me go back and say one thing about our beer business. Within our beer business today, we have 6 breweries out there that manufacture and can beer and bottle beer. We have 13 brew houses that sell beer and food that ultimately promote and build upon our brand. And with the most important, we have 500 beer distributors across the country that distribute all our 12 brands today. So getting new products, getting future acquisition through the distribution system, we have a great infrastructure in place. Along with that, we have close to 100 salespeople out there in the streets. We have a group out there that just call on headquarters for retail accounts. We have a marketing group, we have an R&D group, we have a purchasing group. So we have an infrastructure in place today, both in the beer business and the spirits business, to do additional acquisitions. And last but not least, in the US, is a business called Manitoba Harvest, which we acquired with Tilray, which is foods, grains, of course, that are infused with hemp. And hemp under the Farm Bill is legal within the US. And that is a business, when we acquired it from Tilray, was losing about $6 million EBITDA a year. Today, it's in the $4 to $5 million contribution of EBITDA. And the big thing about the product there, as customers love it because it's high in protein. It's a product that is replaced with other carb type products, paleo diets. It's a great product, and we're looking right now in regards to our hemp drinks, in regards to Delta 9, that ultimately where we could go there. So that's a nice little business for us, run by a real strong consumer packaged goods group that could do other consumer packaged goods on the wellness side. So we're well diversified in the US today without being in the cannabis business. And with any of those businesses, if it was legal at the federal level, we could jump into the cannabis business. And last but not least, in Europe, we have a grow facility in Portugal and a grow facility in Germany. We sell cannabis in Europe today and Australia from a medical standpoint in 20 different countries. And that is what we do there. That's about a $50+ million business, and it's all medical cannabis that's sold through prescription written by doctors. We also own a business in Germany. It was CC Pharma. We converted to Tilray Pharma that sells regular medicines and medical cannabis into drugstores. And that is a much lower margin business, but you're vertically integrated in how you get product to the stores. So that's what Tilray is today. And, we're a diversified company. We are a global company. We have an infrastructure in place from people around the world. And, with the management team that's in place today, we can do a lot more.
Okay, thank you, Irwin. And I have to say, congratulations, because you built all that in a very short period of time, putting all that together. Look, the style here is going to be very rapid fire questions, starting with the US. Explain to us, why do you believe Tilray will be able to enter the US market in the case of rescheduling? Remember, most people believe that rescheduling will mean that states continue to do their thing and that the product will remain federally illegal. So explain, why do you think that in the case of rescheduling, Tilray will be able to enter the US?
So my perception and my interpretation on rescheduling, that it's medical cannabis that will go through the rescheduling. And with that, ultimately, that's what will cause legalization from a federal standpoint. With that, I believe that Tilray, with its knowledge of medical cannabis in Canada, with its knowledge of medical cannabis in Europe, and with ability to grow cannabis in our facilities in Canada, and GMP certified, that we could ship it into the US and sell medical cannabis into the US market. Now, recreational, not at all. And I think what happens here is recreational cannabis from a legalization is left up to the individual states. But medical cannabis will become legal. Medical cannabis will be able to be grown in Canada, be able to be shipped into the US if it's GMP certified. Just like today, medical cannabis shipped into other parts of Europe and other countries can come out of our Canadian facilities as long as it's GMP certified. So that's why I believe that.
No, great. Now, in the case of staying with the US, explain the logic of the MedMen deal, and looking back, would you do that deal again?
Listen, there's lots of times, Pablo, I wish I could look backwards. I think, again, from a branding standpoint, MedMen, I still say, has a great name. In regards to doing that deal at the valuation, just like any deals, you know what? I would not do the deal at the valuation. And I just got off a call. I think, again, depending upon legalization, we do have a foothold and we do have, a US cannabis company. If legalization did happen, and there's stuff we got to do with it. We do own the IP worldwide. We're about to do something with the MedMen brand in Germany. So there is some real good points to it. And 100%, there's some issues that happened along the way after we did the deal. So again, you can't erase what you've done, and how do we ensure that we create value for our shareholders moving forward? And how do we make sure that we can utilize the IP and the assets that are within MedMen today?
Understood. Moving on, how does the alcohol business in the short term help your future US cannabis business?
So I think it doesn't today, but I'll tell you what, I'm a big believer. Cannabis cannibalizes alcohol industry. If tomorrow I was able to sell drinks that are infused with THC, or even drinks ultimately being infused with, hemp, I have in place a beverage group that sells into stores, calls on retailers. I have 500 distributors out there. I have an infrastructure that can do it, and I have brand names that can do it. So I'm not starting from scratch. And by the way, in the alcohol industry, if you look at the multiples that a Molson Coors gets, that an Anheuser-Busch gets, that a Constellation gets, or a Diageo, I'm okay with that. So it's very important to be a diversified company. And the big thing is this here, what I want to ensure we do is how we look at, the Gen Z, how we look at millennials, how we look at getting baby boomers, and ensure that I have, all these different classes coming into our business. And by the way, if I could one day sell cannabis at a recreational, there's no reason I couldn't sell Sweetwater pre-rolls. There's no reason I couldn't sell Sweetwater, flour. So I do have well-known brands which are in the US. So, it's a great margin business. Today, the Sweetwater, margins are in the high 40s, low 50s. The current ABI business that we acquired, the margins are in the high 20s. There's a lot of opportunities to take costs out. That can be a great cash flow business. Beer has been around for many, 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 many years. And I think there's a big opportunity to grow our beer business. I think there's a big opportunity to grow our, spirits business. If I had to sit back and just wait for the government to come out and make decisions, Pablo, there's nothing I could really do in the US today that would enhance the overall business of Tilray.
Understood. Now moving on to the second part of the discussion, beverages, and I can see how cannabis and beverages actually the lines blur. In the last earnings call, you talked about Delta 9 drinks and hemp-based drinks. Is that something you're launching now in the short term, and are the beer distributors going to sell that in the US?
So our intention is, if we could do it, and Nasdaq, we do have certain permission. If we can do it and it doesn't interfere with any of our liquor license out there and is legal in those states, we absolutely will. Because what we do know, those that are out there selling it and don't care to play by the rules, it is selling well. So it is our intention in those states where it's legal to sell and it's okay to sell, we will absolutely be looking to do it. And will we be doing it under our brands Happy Flower? Will we look at Sweetwater? We are absolutely testing and looking to do it where it's permissible.
So on the question of whether the beverage strategy has been a diversification move or a complementary move, I guess it's a bit of both, right? It's not just diversification.
It's not just a diversification. It's very accretive to EBITDA. It's a great category. And more important is this here. I step back for a second and look at the amount of shelf space and beer sales that were lost, through, Bud Light, through some of these other bigger beer brands. I also look back and say this here, a lot of, the craft beer businesses were bought up by the big guys. So it gives somebody an opportunity to go out there and consolidate the craft beer business, which, Gen Z, millennials and that want today and want to drink and don't want to be drinking what their fathers or grandfathers, were drinking. So I see a big opportunity for us. The other thing is this here, and I tried it today, we've come out with some non-alcs on the Montauk brand. We're coming out with a non-alc in Runner's High. We're coming out with some water products. We're coming out with some energy drinks. We're coming out with some other product lines out there in regards to pub ice. So there's lots of stuff we're doing, just not only in the alcohol, there's a lot of stuff that we're doing in the beverage business. And you look at the beverage business today, it's in the trillions in regards to sales, okay? Sales continuously decline within the soda industry. Sales continuously decline within other categories within beverage. Beverage is such a big, big, big category. And if you can get a small percentage of beverage, and I say this to our guys, if we got 500 distributors out there, and each distributor is looking to grow their business, and we grew at $1 million with each one, there's $500 million of sales. And the thing is, distributors today have the trucks, the infrastructure in place, and where they've lost business with Bud Light or lost business with other drinks out there, they're looking for new innovation out there, and that's what we have to bring them. So I'm really excited about the beverage business.
So last question on beverages. Obviously, are you done with M&A or do you go for more? Constellation Brands, Molson Coors, about 11 billion in revenues. Little Boston Beer, 2 billion in revenues. Here you are on a run rate of 300 million. Is M&A still a part of the strategy in beverages?
I think, there's 4 ways we grow our beverage business. Number 1 is new distribution. Number 2 is innovation. Number 3 is ensuring we're growing our businesses through, in bars and, on premise. Number 4 is acquisitions. So yes, we are interested in doing good acquisitions. And a big part of that, Pablo, is international. We think we would do well international with our beers internationally. I've done that before at Herein. My thing at Herein was we bought international businesses. We had that infrastructure in place, and we parlayed that with our brands in the U.S., and that's something we'd like to do.
No, thank you. Look, before we move on to international and to the Canadian business, I want to touch on 3 other points on what I would call other topics. First, on financials, are you comfortable with your debt level right now, maturities, or do you need to raise capital?
So I'm comfortable with my debt level today. We've worked our debt level down. I think our net debt today is about $175 million. And with that generating cash and locked in at interest rates, absolutely, I'm comfortable with our debt level. I've been corrected here. Our net debt is $135 million. So, with our liquidity in our stock, if we did another acquisition and it made sense, we look to raise additional capital only on an accretive acquisition, Pablo.
Okay, understood. Now, separate another question. Are you at a disadvantage by not having a CPG partner like others like OGI, Kronos, Oxley, Canopy Growth have?
I don't think we are at all, because I tell you what, number 1, the big thing there was once we know And upon legalization, I think we'll have choices on a CPG partner. Should we have multiple? Should we have one in beverage? Should we have one in medical? Should we have one, in CPG products? So I think until we know what is the best partner, what they bring to the party, because we don't want one just for money. What can they bring to the party in intellectual property, in innovation, and in distribution, etc. So I think that's why I've stayed away from that, is because who's the right partner for us, because we're so well diversified. And I think upon, either rescheduling or something in the US, and if we wanted one today, we could get one. We don't necessarily need one today.
Understood. Look, another question, Irwin. Investors often ask on the matter of compensation. Can you give us some context for your compensation? What are the reasonable comparisons, benchmarks? What are the KPIs your board is looking at? Thanks.
Listen, my compensation, 90% of my compensation is based on performance, whether it's, sales, EBITDA, free cash, acquisitions, growth, building out the company. And I come back and I say this here, when I got to Afria, we were, days away from, not being around. I come back, myself and the team, we built today a company close to $1 billion. We're probably the largest grower of cannabis in the US. We've diversified into beverages. We have a global company. In regards to my compensation, 90% of my compensation is performance-based. And I think what happens is it gets reported that I made $23 million a year. And I'd like to see where I made the $23 million a year, because the way the SEC rules is what's the value of the compensation if you fully earned it all. And that's the way you have to disclose it. I've never sold a share since I've been here. And the only compensation that I've got in cash dollars is my cash compensation and bonus dollars. So it always, yes, gets, disclosed the way we're supposed to disclose it by the SEC. And everybody picks it up in the biggest number possible, but it's just not reality of what I paid in those kind of dollars.
Understood. Thank you. Moving on to international, regarding Germany, what are your realistic expectations for growth there after the change in the narcotics law?
Listen, I come back and I look at, Germany potentially being a $3 billion market. If you take the 80 million people that live there and the size of the opportunity. And if you look at Canada today, which is at retail at $10 billion, it's a $5 billion market, has the ability to go to 10 billion. I think Germany on medical cannabis can be a $3 billion market. So at a $3 billion market, again, do I think we can pick up a 10% of that market? We have the ability to do that. So is that worth a $200 to $300 million opportunity for us? I think so. Today, we sell about $25–30 million of cannabis into Germany today. So now that every single doctor can write a prescription and it's available to everyone 18 years and older, I see, that $300 million opportunity out there for us, Pablo.
Understood. Can you just explain in the context of, there are many licensed importers in Germany. There's a number of companies operating there. Why is your position stronger than theirs, and why can you aspire to that 10% share or higher?
So you're right. There's many there. There's still an illicit market, which I have to be careful for. But today, I think we have an excellent, infrastructure. I think we have brands that people know. I think we have the distribution system to get it to the stores, through Tilray Pharma. And we have in-country grow already, where that in-country grow before only serviced for the tenders to the German government. So we have in-country grow. We have products being produced in Portugal that can be shipped there. and we have GMP certified products that could come from Canada. With that, there's absolutely lots of work to do to market to all the doctors there. There's additional research that has to happen there that shows the benefit of cannabis. And I will tell you, it's now automatic to get to that 300. There's a lot of work that's got to go into that, but we've had a team in place doing that since 2018, 19.
And are you expanding the local staff in terms of salespeople and visiting doctors? Is that part of your plan too?
Yes, and that's the whole thing in regards to, how we work Tilray Pharma into this here, how we work in regards to our infrastructure that's already there, how we continuously educate the doctors and work with doctors. Absolutely, we'll very much increase and spend more money on that to build this out.
No, thank you. Look, I know we promised to keep this around 30 minutes, but two more here. So moving on to Canada, can you explain the recent share loss, from 12.5% in the November quarter to I think 11.6% in the last quarter based on your earnings call? Just some context, and what is a reasonable target over time? Now we're talking Canadian rec.
Listen, I think there's a couple things. And, you and I went through this, when you were covering consumer packaged goods business on IRI and Nielsen information. Not everything happens that you expect in a quarter. There was some seasonality in grow facilities and timing in regards to the potency levels that we had available. Number one. Number two, in regards to some of our new innovation and that getting out there and the timing on that. And I think, again, where we went on pricing, on price compression versus some of the others that just dropped price. And where we decided to hold price. So we look at a full year. We look at our innovation now coming out in the fourth quarter. We come back and we look at where our potencies levels are now. And one thing, it's important for us is, when we say it's a 27% potency, it's a 27%. So they're the reasons why I think, coming back, it's not about, and still, even at 11.6, I think the next closest share to us was like a 7. So we're almost, 4.5 points higher in share from a standpoint there. But listen, I've come out and said I'd like 15, 16% share. So that's the reasons. It's not excuses, but I hope to get that back and then some.
Thank you. Look, I'm going to add one more here, Irwin, and it's a bit of a general question. People normally often make the comparison between the US MSOs and the Canadian licensed producers, and I think it's apple and oranges comparison, and to some extent, it's not an either-or decision for an investor, right? But people, focus on the high profitability and cash flow of the US MSOs versus, the Canadian LPs, which have turned to burn cash flow. But you want to give some context to that, because to some extent, people will make the argument the LPs have a global opportunity. They built an infrastructure for the world, and the US companies benefit, from what may be temporary license restricted markets, right? But any thoughts that you would say when comparing one and the other? Just general comments.
No, listen, the Canadian market, it's been a tough market. And I think, again, as I said, the higher excise tax, the number of licenses that have come out in regards to, still the illicit market out there. So there's been a lot of, issues that have caused, no one in the Canadian market and the difficulty in making money. I think, as Tilray has done consolidation of Tilray, and Tilray has done consolidation of Hexo, we've taken a lot of costs out of the business. We know how to grow cannabis. We know how to grow it cheaper. We have facilities out there today that, are first-class facilities. We had to deal with a lot of money being spent on those facilities and the amortization. So again, there is a lot of learning that went on in the market that I think is, behind us now. And I think, again, there's a lot of money to be made in Canada ultimately. If two things didn't happen there, Pablo, if the price compression to the level it didn't happen, and that's driven by the number of LPs and still the illicit market, and the high excise tax, those that are in it would still be making a lot of money in the Canadian market. In the US market, there's still a lot of unknowns here. And that's why we're in here with a business been around for many, many years. There's a lot of money to be made in the beer business. There's a lot of money to be made in the spirits business. So with that, that's why I'm saying if just medical cannabis goes ahead from a rescheduling and Tilray can get into it, I don't want to get into a business for the next 5 years. I go lose money, and it's going to be difficult. So I think once we know the way the U.S. market shuffles out, and with our experience, Tilray is in an excellent position. I don't know if it's going to be a 3-tier system, two-tier system. And again, we don't know, which I don't believe it's going to be, that legalization is going to happen in recreational and medical. So, when you have to depend on government, you have to depend on the FDA, you have to depend on these things. There's a lot of unknown. But right now, we are in a business in the US that's got good margins, that's been around for a lot of years. And with that, we're in a good business. We will be able to jump into the cannabis business once we know where to jump into.
Understood. Thank you very much, Irwin. You've been very generous with your time here. Look, to all the participants that joined, thank you for joining us today. I read your questions that you send me via email. I read the questions that you send or you put on the Twitter feeds or the post. So look forward to more of these straight talk sessions with other executives in the industry, and keep sending us your feedback. So thanks everyone for joining us. And Irwin, thank you very much again to you.
I enjoyed this, and let me know. I'd come back and do this anytime. And I think really good questions, really good insight. And, like I said, in Canada, cannabis is only 5 years old. In the US, there's been lots of changes and lots of unknowns. But again, I think if you come back and look at the way Tilray has taken positions and what we've done, on what we inherited, where we should go, there's no crystal ball for us to look into that says this is what we should be doing. And have we made mistakes along the way? Absolutely. And do I think we do certain things differently today? But I feel from where we are in Canada, where we are in the US, where we are in Europe, where our balance sheet is, that we're in a good place.
Got it. Thank you. Thank you very much. Have a good day, everyone.